Millions of average traders and investors are wearing a neck brace right now to help them recover from the whiplash that they got between yesterday and today. Yesterday, they were so fearful and they sold their stocks. Today, the whiplash came around and they are kicking themselves all over again, buying the same stocks they just sold yesterday at lower prices, buying them again for higher prices. And they're asking themselves, what the heck happened? Where did all the fear go? Well, that is the mindset and the thought process of the emotional herd, most people out there. The cowboys and the cowgirls, the 5% of people that generally consistently make money year in and year out, are sitting on the top of the hill looking down at the valley at the rest of the emotional herd, and they know that the so-called fear yesterday was not justified. When the tractor on the farm is driving around, sometimes the tractor backfires, and that scares the cows, the emotional herd, and they start taking off running. The cowboys and the cowgirls understand that sometimes the tractor backfires and that it naturally happens. Well, yet again, another so-called fearful news event is out there. The emotional people react the way they always do, emotionally. Yesterday, they sold, back in buying today. What did I share with you yesterday? Just remain calm. Yes, I do see negative divergences in the stock market, but with much of my longer and medium-term research showing me that the stock market can absolutely be higher over the next 4 to 6 months. I can be wrong, nothing has to happen, but when my research is that medium to longer term bullish, I want to stay invested, and I did. The S&P 500, after being down big yesterday, so far today up nicely. The next bullish item that I want to see on the S&P 500 would first be a unconfirmed and then a confirmed breakout above 6,836. That would be very bullish for the S&P. The stock market in general, in my opinion, is going through the absolutely natural and healthy process of aging in this bull market. I think it's very possible, I could be wrong, that stocks generally head higher here for the next 4 to 6 months because I have yet to see the traditional signs of the ending of the bull market. Now, yes, absolutely, I've shared with you for at least 2 months now, I'm seeing negative divergences, but they are not strengthening, they are not spreading. Therefore, I think generally, not every day or every week, but generally stocks can head higher. I want to maintain and not sell my core stock positions. Potentially the next trade in natural gas is to short natural gas. If natural gas is below $3.71 a cubic foot by the end of the trading day, I will likely have added to my short natural gas position. So yes, I still own my long position. I'm willing to hold it until it comes back up again and I can sell it at a gain. But I already half hedged my long natural gas position. In other words, opened up a position that makes money as natural gas prices fall. I did that several days ago, half hedged my long position, potentially, let's see, added to it today. Anybody long natural gas here that isn't going to be hedged, I think they could possibly be in trouble. So next trade here could be shorting natural gas. Potentially a buying opportunity in gold is coming today, looking like we could make an unconfirmed breakout above $3,984 an ounce. If we can close above that level today, close meaningfully higher tomorrow, could be a buying opportunity in gold. A little bit of patience. Let's see what happens tomorrow. The 10-year yield up big so far today. This is wonderful for anybody shorting bond funds like I am. So here we are, still in that unconfirmed breakout. Technically speaking, the 10-year yield could come up to 4.20%. Two things to watch here. How much further yields rise? If they rise further, it will be even better for the short bond fund position. If they start to top out, I could start to take my gains off the table of my short bond fund position, maybe start going long bond funds, we shall see. But at this point, now I realize as far as the year goes, the 10-year yield is absolutely still lower than it was in January and March and earlier in the year. But in reference to the last couple weeks, it certainly is higher. So anybody with some money on the side that thinks it's right for them, that they want to actually buy real bonds, not bond funds, but real bonds, corporate bonds, maybe treasuries if that's what you're into, now could be a little bit of a better time in reference to the last couple weeks, not in reference to 2025 as a whole, but in reference to the last couple weeks. Crude oil prices lower on the day so far, never able to confirm the unconfirmed breakouts above $61.53 a barrel and $60.11 a barrel. So what we're left is with the original confirmed breakout way down at $58 a barrel. So technically speaking, and I can be wrong, oil prices could fall to $58 a barrel here. I am not in a crude oil trade. At this point now, I don't think I will enter one. In a perfect world, the best time, and I get it with hindsight, was a couple days ago when we kept hitting our head on $61.53 a barrel. Sure, I'd have to go back and look at the exact timing. Did we come up there in the pre-market and it couldn't have been a perfect time to short oil anyway? I don't know, but I never want to chase after a trade. I want to allow the high odds opportunities to come to me. So in this case, I am not going to chase a possible short crude oil trade. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC.